Stuart, thanks so much for joining us today. Really appreciate your time. Excited to have a conversation with you about taxes in the Middle East and how things are changing over there in your region. But before we do, I'd love to have a quick introduction to yourself. So a bit of an overview and a bit of background and experience that you've got, as well as your time in UAE and your most recent role at Dubizzle.
Colin, thanks for having me. I really appreciate it. Pleased to be here. So I came out to the Middle East 10 years ago, out to Dubai. I actually moved out with PwC. I had spent around 6 or 7 years in the UK working in corporate tax, and at that time, it was just a very fast-growing market in the UAE for transactions, sovereign wealth fund activity, oil and gas activity, and so on and so forth. So I was drawn in by an attraction for the weather, for the lifestyle, and for the opportunity for my career. So I came, I did a couple of years working in M&A tax, and then I moved in-house. I worked for the global ports operator called DP World, which is a UAE headquartered multinational.
Mhm.
And just recently, around 15 or 16 months ago, I moved into a different industry as a head of tax at Dubizzle Group. Dubizzle Group are an online classifieds platform. We specialize in property classifieds and motors and other general household classifieds and jobs. So we're a multinational. We have similar platforms across different countries in the GCC and in Pakistan. And so far, it's going well.
Interesting. And Dubizzle, that's where we go if you want to buy a house or buy a car, right, in the UAE.
Yeah, so in the UAE, we have two brands. We have Dubizzle itself, which has been around for a long time. It's a very recognizable brand in the UAE itself. We also have a brand called Bayut, which means home in Arabic. And people go to Bayut for purely for property classifieds. So it's buying and renting properties. Similar to other sites you might see in Europe, you have Rightmove in the UK and Zoopla, similar property type websites. We operate that same platform idea under a different philosophy in the UAE.
Brilliant. That sounds great. So what does your tax team look like there at Dubizzle?
So it's on a growth trajectory. It's only two of us, myself and someone who specializes more on the indirect tax side of things. So as around 5 years ago, the UAE, along with a number of countries in the GCC, they introduced a VAT framework and system in each country. So we've had VAT now for 5 years in the UAE at 5%. And so there's a lot of VAT compliance and VAT planning and structuring to be done. So we have someone who specializes in that. I tend to look after more of the group structure, tax risks, tax reporting, compliance management, as well as transactions. So at the moment, there's two of us. We're hoping to grow that as the business grows next year. But for the moment, it's a nice team. It's easy to start a tax team when you have two people. You can really embed some processes and procedures and really get things in the shape that you want them to be in before you scale it up and bring some more people in the door.
Excellent. Thanks for that, Stu. In your experience in the time that you've been in the UAE, how have you perceived the development of skills or even the upskilling of tax professionals in the region? Are you seeing an influx of talent coming through the universities there now?
Yeah, that's a really good point, Colin. If I can go back 10 years, there was a huge import, let's call it a net import of talent into the UAE, especially in accounting, tax, legal, and so on and so forth. So when I first arrived in the UAE, I was in a team of around 20 professionals in M&A tax, none of whom were Emirati. There was Spanish, Dutch, British, Australian, American, we had Jordanian, Lebanese, Egyptian. All of those people had done what I'd done. They'd come to the UAE to work because of the need for the talent to arrive. But what I've noticed over the last 10 years is a gradual shift to mix that net import with some people who have been born here, educated here, graduated from university, undertaken their accounting qualifications here, and been taken on by the Big Four and others. And they're now making up a reasonably substantial part of the workforce. My indirect tax manager, who I mentioned earlier, she was born and educated in the UAE. So it's no longer just the norm to think that everyone's arrived from somewhere. Now in the workforce, you're seeing many people who have been born here, who have been educated here. And alongside that, the quality of the education from local schools, universities has improved in that time. In what would arguably be a very short time, 10 years, we have some quality institutions producing some quality talent, and the local workforce is now turning to that talent to bring people in. But with that being said, there's still a huge demand for people to come with skills from other countries, and the country itself is making huge allowances and benefits to get people to migrate to the UAE. People who have skills are being offered golden visas, 10-year residency visas with no questions asked.
Wow.
They're being offered visas if they have certain level of investments or a certain skill set, which is considered to be cutting edge in technology and in biotech and in other fields that are essentially in high demand globally. The country is desperate for those people to come. And to be honest, that also includes tax professionals, because we are introducing corporate tax, or actually we have introduced corporate tax as of June this year in the UAE, and that presents another set of skills for which we need a certain skill set in order to navigate.
Very interesting. And is that skill set, do you believe, already there in the UAE, or does it still need to be recruited in? And particularly for Divisal, how are you approaching that?
So I think it's a mixed bag. The skill set in tax in the UAE is interesting because I come from a UK accounting and tax background, and a tax person coming from the UK is exactly that. They usually have an accounting background or an accounting qualification. But you have many countries globally where the normal route is more of a legal background. So lawyers would become tax lawyers rather than accountants becoming tax advisors. So the UAE has a mix of those things, and that's a good thing in many cases. Certainly when it comes to transactions and structuring, having someone who's has an accounting understanding and having someone who's much more of a lawyer can be very useful, a useful team.
Mm.
But for the introduction of a tax regime, it tends to be that you need much more of the accounting side of things than the legal interpretation side of things. You need someone who understands how to get from accounting profit through to tax return, through to tax payment. And that tends to be an accounting person that does that. So I think the skill set that's here isn't entirely suited to the new corporate tax. And I think we've seen in the market, the Big Four especially heavily recruiting into newly created corporate tax teams. So it's not their existing advisory teams who are taking on the burden of corporate tax. It's them creating entirely new teams of corporate tax professionals and then bringing them from established taxing jurisdictions where they have established processes for management of compliance and so on and so forth. It's a really interesting time. Still a lot of people coming in and a lot of local training happening as well. Now that the tax law is fully understood, we have a lot of people being trained up locally on how to use that law to assist businesses to meet their tax obligations.
Super interesting. It sounds like a really exciting time to be a tax professional in the GCC, particularly if you have a corporate tax skill set, given that's what's coming in next year.
Absolutely. When the law was first announced and then subsequently released, I think there was a big move in the market to recruit tax people certainly amongst the larger companies anyway. Then I think there was a gradual kind of mellowing of that kind of urgency
Mhm.
while people took some time to understand the law a bit better. And now I think I see the market for talent really hotting up again as people now understand the law, now understand the obligations that they're under, and they realize that certainly above a certain size of a business needs a dedicated tax person. And in many cases, the people who have done the VAT implementation 5 years ago in the UAE are skilled finance professionals, but often their role is beyond VAT. They'll be doing financial controlling and reporting and whatnot. So to add CIT to their workload already is probably proving too much. And I think we'll see a lot of recruitment in the UAE over the next 6 months or so.
Yeah, no, that's certainly what we see as well from the local tax side, that teams are already to a degree overburdened in terms of the amount of work that they need to do. So to add another particular skill set might be a bit too much. From a technological angle, then, how does the introduction of corporate tax in the UAE change the way that organizations operate? I know it's particularly digital over there in GCC.
Yeah, it's quite an interesting thing. I think none of us have been through the introduction of a corporate tax law in a country. It's a very new thing to me. Luckily, I have a corporate tax background from the UK, but I've certainly never done a corporate tax implementation project. So what's interesting is having that take place in 2023 means that the local tax authority is in a very good position to make this a digitally administered tax. And what I mean by that is that rather than expecting printed tax returns with a signature or printed financial statements with a director's signature and all of that posted off and processed in some central government processing facility, we'll be submitting, as you do now in the UK, you'll be submitting tax returns electronically, you'll be submitting your accounts, perhaps tagged in XBRL or iXBRL, perhaps in some other way, some way that's even more simple for taxpayers to navigate. And all of that data will be being collected by the tax authority. And they'll be using that to benchmark taxpayers, to look into things in more detail, to, I say, cut and shut that data to gain insights into taxpayer behavior and also to stop fraud and any other anomalies in their system of taxation. So I think technology will play a huge part from the tax authority's perspective, and it should also play a huge part from the taxpayer's perspective, because I think we've all been moving over the last decade or so towards more capable ERP systems, more joined up reporting between our ERP and our group consolidation tool, for example. And certainly in the last 5 years, been seeking more insights into our financial data that we have in our businesses. And I think now that tax is coming in the UAE, we'll see a big push from businesses who have not taken that technological leap forward yet with their financial reporting and accounting to now do, because corporate tax gives them the perfect opportunity to make that step to make their tax life much easier going forward.
So, Stuart, recognizing that corporate tax comes in next year, obviously VAT came in 5 years ago and that's been successfully implemented. How do you make it clear to your leadership team that this tax change is coming? I'm sure it's no surprise, but how do you make it clear that the change is coming and then be ready for it?
Yeah, I think you mentioned VAT coming in 5 years ago. I think that's helped a great deal, Colin, in terms of making leadership aware that we're not a tax-free country anymore. We're not a tax haven anymore. A lot of challenges were addressed back at the VAT implementation. I think you had many business leaders who presumed out of optimism that VAT would not be applicable for them. And obviously that was not the case. And a lot of tax people, tax leaders had a lot of difficult conversations around that time when VAT was introduced. And now that we're introducing another tax, CIT, I think those conversations are much easier. And the media and the advisors in this country now are more switched on and more capable and getting that message out there much better. So bringing in corporate tax this time, yes, it's a different tax. I think the difficult conversations now are about how it's different to VAT, because obviously you're dealing with non-tax people in most cases. So just explaining the basics about how things are different, why they're different, and how the business can adapt and comply with the new regulations.
So we've talked about how we make it clear to leadership that the corporate tax change is coming. What would you say are the top 3 mistakes that in-house tax teams could make related to this change?
I think the biggest one is just being too insular, to just operating in a silo amongst yourselves. Tax people tend to know how to talk about tax to each other, but perhaps hesitate when it comes to talking about tax to a wider audience. And really, in a situation where there's a new tax regime being introduced, tax really has to have a seat at the table, at the decision-making table, whether that's with the CEO, the CFO, the general counsel, whether you have a chief strategy officer or a technology officer. Tax really have to be front and center, or at least front of mind, about a lot of business decisions that will be happening now and going forward, given that there will now be a corporate tax in the UAE. So I think, yeah, the biggest and most important thing is just don't operate in a silo.
Yeah.
Don't plan corporate tax just by yourself within your team. You have to really engage with other parts of the business, finance, legal, and so on and so forth. And you need to be visible to those people and dependable to those people to give input on corporate tax. I think another thing that's occurred to me over the last few months is as we've been preparing ourselves for corporate tax and looking at how our technology is working around corporate tax compliance, is that it's very appealing and very easy to want to fit your old processes into new technology.
Yeah.
For example, we're a multinational, so we're not just based in the UAE. We have tax in other countries already. And when we do our tax reporting, or when we did our tax reporting previously, we did a very manual approach, Excel based. It wasn't technologically advanced, but we knew how it worked and we liked it. So when we try to then make our whole overall approach much more technology friendly, much more digital, much more efficient, it's very easy to want to replicate that old-fashioned approach. And I think the biggest advice that I have is to stay away from that. Do what's right for the technology, not necessarily what's right for your brain. Let your brain adapt to what the technology can do, rather than trying to change the technology in a way that it's not designed to do. Yeah, Colin, I think the third mistake that I see tax teams often making is just having a general fear of asking important questions. Bringing in a new tax, implementing a new tax regime, adapting your business to comply with that regime, there's a lot of questions that come up. Day in, day out, I have questions that I read something in the law, I think about it, and I think, I don't know how that applies to my business.
Mm.
The best thing for me to do is to go out and to ask that question, even if it's not related to tax or finance. If it's something about how sales operates, or it's something about property or assets that we own that I don't know the answer, I need to be asking those questions up front, and the business needs to be comfortable with me asking those questions, and that comfort will come the more you ask and the more you engage and reach out with the rest of the business.
Yeah, makes a lot of sense. Seeing the change in the introduction of corporate tax as a collaborative, organization-wide change rather than just the tax team looking after it, etc., is probably sensible. And I think your second point around matching new tech to old processes for us is something that we see all the time. Going through that initial, if you want to call it slight period of pain, where you're making sure that you have technology matching your processes, I think is so valuable because in the long term, you reap the rewards. Stuart, what are your thoughts then in terms of top three takeaways? If there are any in-house tax teams watching in the Middle East with the advent of corporate tax on the horizon, what are your top three takeaways or tips for them?
Yeah, I think top three, number one is to act now. In the UAE, corporate tax is now effective. It was since 1st of June this year. I think a number of people waited once the law was released for some more detail to come out, some more decisions around the law to come out. I think that waiting period is now over. If you're not preparing now, you're a little bit behind the game. So act now, understand how the tax changes will affect your business. And if that's something that you need support with, then reach out to your usual advisors or to a new specialist corporate tax advisor and really get that process moving. You don't want to get to the end of your first tax period and realize that there's a fundamental problem with either your structure or your understanding of how the tax will be applied to your business. Secondly, when we've touched a lot on this in this discussion, Colin, is the use of technology. It's 2023, going on 2024. It's really time that tax teams and wider finance teams and HR teams and all the other functions of a business are really maximizing their use of technology in operating their business effectively. And there's a lot of products in the market now for tax that save you a lot of manual admin effort, keep you more aligned and focused on what you're doing, and allow for collaboration between your teams, which is the crucial part, I think. Many tax teams previously, in previous years and decades, were operating as one, doing their thing day in, day out, getting things managed. But now it's all about collaborating to do things much more quickly than that. It's something that LocTax has assisted us with, and would certainly assist others as well. The third takeaway, an important point to think about, is also budgets, right? We've talked about technology. We know technology can be expensive, but if it's coming down to looking forward to your budget for next year, the introduction of a new tax is also a budgetary push, as a constraint as well. You will need to spend some money perhaps on advisors. You will need to spend some money on perhaps technology if you're going to be preparing tax returns or adapting your accounting system or getting more companies audited or whatever. So you will have a little bit more cost as a result of the introduction of corporate tax, but that's something that can be offset against a wider business cost of adapting to more technology solutions. So if you are in the process or have recently changed your ERP system to be more modern and up to date, then perhaps that ERP system comes with a tax module built in.